You're listening to The Moose and the Loose, your 10 minutes action-packed financial podcast with your host, Mikey Hu. Hey, what's up, Market Moose? Mike from The Moose on the Loose. I hope you are doing well on this Wednesday. Sorry, I had to look at the numbers of the date and stuff. I'm a little bit all over the place. So as you are listening to this, I am in Iceland. So I've done some pre-recording for you guys, making sure that you don't feel alone, right? Full disclaimer, I don't think I'll be able to record the full 2 weeks. But anyways, you're going to have still a few episodes. So today we are talking about Great West Life versus Manulife versus Sun Life. A lot of investors ask me to make that comparison. And some of them also ask, well, Mike, could you please add Intact Financial, IFC, to the mix? Unfortunately, I cannot really because yes, they are for companies that focus on insurance, but life insurance and personal and commercial insurance is not the same. Plus, the three life insurance companies in Canada that are Great West, Manulife, and Sun Life, they have an hybrid business model where they started with life insurance, but they quickly realized that they could make a lot of money as well with wealth management. So they do have a lot of assets under management for all of them, and this is that was a big move a long time ago. So they can not only rely on their life insurance business, but also on asset management. So just to give you an idea, we have Great West Life with 1.1 trillion asset under management. We have Manulife at 1.4 and Sun Life as well at 1.4. So those are pretty big guys in the wealth management industry. They can fight head to head against some banks. So this is like a great growth vector for them. So now I'll tell you up front, I'm not a big fan of Manulife, mostly because when you look back in time in the financial crisis of 2008, it is the only one of the three that had to cut their dividend, and they kind of like stayed in the penalty box until recently. So they have been growing their dividend for a while now. They have finally catch up to the dividend cut they made back, I think it was in 2010. So it took them a while to recover. While during the financial crisis, Great West and Sun Life, what they did is that they just maintained their dividend for I think like 2-3 years before resuming their dividend growth policy. So one cut, the other two did well. So that is enough for me to leave Manulife a little bit on the side. So what I like to do is to compare the dividend triangle and then see if there's any difference in the business model. So dividend triangle, Manulife and Sun Life shows very strong dividend triangle right now over the past 5 years. Great West is a little bit weaker. They've done a little bit more transaction inside their business, so that's why it affected earnings and revenue. But overall, those are like very stable business models. I don't expect huge growth from them going forward. I'm thinking a little bit more like they should be kind of like deluxe bonds, so companies with limited stock price appreciation, but with a generous yield that will continue, and the dividend will continue to increase to at least match inflation. Over the past few years, actually, it was a lot better than just matching inflation, which is great. Or if you're thinking in decades, those are not going to drive your portfolio total return, but they will definitely bring some stability and bring some income to the mix, which is kind of great. So from a numbers perspective alone, Manulife and Sun Life seems to be the best pick. I would tend to go with Sun Life just because they proved that they were better than Manulife during the financial crisis. Again, next time, maybe it's going to be different. But right now, what we can tell is what happened during the last recession. In terms of business model, and I think this is where it could be interesting for investors, that will make the difference between what you really want to invest in. Because, I mean, they're three life insurance company, so similar business model, all based in Canada, all doing wealth management as well. However, the source of their revenue is completely different from one place to another. So if you want to make a big play on life insurance company and on life insurance revenue, probably that your best pick would be Great-West Life, with 32% coming from Canada, 27% from the US, 22% from asset management, and 21% from the European market. So great concentration in North America, with 60% of the revenue coming over there, and then the rest is asset management in Europe. So I would probably say that if you want to have a focus on life insurance, Great-West Life is probably your bet. If you want to have a focus on asset management, probably that the one that you would like to have is Sun Life, because 33% of their revenue comes from Canada in terms of life insurance, 30% comes from asset management, then 22% from life insurance in the US, and 15% from Asia. So this one, not present in Europe, mostly still North America, but 30% in asset. This is the largest one. So we have 22% for Great-West Life, and actually Manulife is at 20%. So Manulife is really a play on the Asian market. So 31% of their revenue is coming from Asia, 26% from the US, and 22% from Canada, and only 20% from asset management. So again, it really depends on what you want in your portfolio. I think that going forward, the three companies are great. Over the past 5 years, better numbers are for Manulife and Sun Life. But then you need to decide if you want to make a play on life insurance, mostly in North America, that would be Great-West. If you want to make a play on life insurance plus more asset management, it would be Sun Life. And if you're thinking about Asia and US, well, Manulife will be your pick. So as you can see, it's easier this way, just to go with your preference, because between you and me, I don't know, and you don't know which one will outperform the other two in the next 5, 10, 15 years. So you might as well go with a higher level of conviction into what you believe is going to be important for the coming years. Then looking at the dividend triangle will help you make also a difference between what you prefer. When I look at the numbers, my focus is always geared toward dividend growth. So looking at dividend growth, the past 5 years at Manulife is at 9.92, Sun Life is at 9.50, and Great-West Life is at 5.98. So definitely a big difference here. And if we look at the past 1, 3, and 5 years, we're really always close to 10% for Manulife. We're same thing for Sun Life, and then for Great-West, again around 5 to 6%, like really 6% growth rate. So high single digit instead of like double digit for the other two. So once again, probably that Sun Life seems to be the better bet in my opinion. The second bet, I would still go for more solid balance sheet and past performance. So I would go with Great-West. But doesn't mean that Manulife is a bad pick. Actually, it has performed very solidly on the market over the past few years. And it's actually almost double the size of the other two. So that could also count for something, right? All right, Moose, that's enough for today. I hope that you will enjoy your weekend. I'm not going to report any other podcast this week. I'm going to skip to next week, trying to record another 3 episodes. So you're going to have like 3 episodes this week, 3 episodes next week. And then when I come back on the 22nd, it will be a full week of the Moose on the Loose. All right, take good care, and we're going to talk again next Monday. Until then, don't forget to stay invested. Hey, welcome to the disclaimer. If you're listening to the Moose on the Loose, you cannot really expect me to give you buy or sell recommendation or financial advice, right? You're here for fun, you're here for information and some entertainment. But I am not your financial advisor, I am not your broker, so therefore I'm not liable if you're losing money after listening to the podcast. If you're looking for some advice, go see a professional. If not, you can enjoy the show and do your due diligence after it.